Hey, what's up, good people? How you doing? Welcome back to Stock Up with Larry Jones. Take a second, take that finger if you've been rolling with me and hit that like button. Never stop doing that. It does help the page out. If you're new to the page, go ahead and hit the like, subscribe, then the notification bell. Hey, it's a lot to talk to you guys about today. And we're getting ready for some key data points. We do know that tomorrow is Tuesday, and we do know that the consumer price index comes out and measures inflation, right? We'll talk about that a little later. Let's get into a few things I want to talk about. On last week's video, the video that you'll see at the end, I'm going to leave it probably at the end of every video because I think it's important for everyone to watch. So I talked about how companies, if they don't have financing or if they don't have money right now, that they are in trouble regardless.
Well, first of all, what's playing out is a lot of these companies were driven essentially by super cheap money. I mean, if you go out and get fixed income rates at 2%, that gives you a tremendous amount of money to finance. From a general standpoint on the tech business, if a company does not have earnings, if a company does not have strong cash flow and there is uncertainty about this company, I just think they're going to get punished by investors. If you look at even the companies that have tremendous earnings and tremendous cash flow, they're getting punished by investors. So I just think it's time to be very cautious on more what I call speculative tech.
As it pertains to a recession, I'm going to play a clip here from a gentleman that also I agree with and align with, where he suggests that it's not going to be a long recession, but he thinks it's going to be a short recession, but he also do think that a recession is coming, and so do I.
You said you expect a slight recession next year. What gives you the confidence that it will be slight or shallow as you're talking about and appears most investors expect too?
Yeah, first of all, it's our research team, and they're one of the best in the world, and they're a lot of talented people, and they've been working this question, and so they have the first 3 quarters of next year negative. Let's be clear, 1% or so, plus or minus, but not a deep recession. So what gives us confidence in that? And it's really the two-way question, which is the toughest thing about what the Fed's job is to slow down inflation, is the best thing about America. American consumers are spending more this year than they did last year. In fact, in the first week of December, it picked up a little bit from November to a little higher percentage, say 6% versus 5%, but it's still strong and consistent with a 2% plus growth economy. So that's a good thing because that's what makes America work.
So what does this all mean? All right, so there's a looming recession coming. Most people think is coming in. We know we have CPI coming tomorrow, and then the FOMC meeting the next day. Let's discuss a few things that I want you guys to know. We do know that this has been what most will call financial purgatory, a forever holding pattern. Regardless of the stock that you've been buying, whether they're good companies, just like the report said, had cash or access to cash, had earnings, it's still been a dumpster dive, just trying to pick a good stock even for long-term investment, right? But if you know what you're doing and you're picking good companies, you're not necessarily overly worried about these short-term dips. Because if you get a good company with earnings and a fair price to earnings, remember I showed you guys what a PE is, and they have access to cash and they have revenue, right? And they're in a business that's going to be growing and not getting smaller, then you'll be okay in the long run, right? And so all you need is patience, right? So the question is, will the Fed screw things up? Will the Fed go up another 75 basis points, or will he go up 50 basis points? 50 basis points is baked in right now, right? And if he goes 75, that's going to tank the market. If CPI comes out high tomorrow morning at 8:30 Eastern Standard Time, that's going to tank the market. But if it doesn't, like we have a green day today, and I'm shooting this before closing bell, so anything is possible, remember that. So just keep all of this in mind. That's why I'm not NOT in any short-term plays. I'm not even in the TQQ, the SQQ, because for the first time, and I've called every rate hike perfectly, for the first time, I truly don't know what Wednesday is going to be, what he's going to say, 50 or 75. We do know it's between those two. The CPI, Consumer Price Index, comes in high, which means inflation is still running out of control. Then on top of that, the Fed comes and say, hey, we need to go 75 basis points. That's going to tank the market. And let's just get ready for it and further prolong the financial purgatory you and I have been feeling in this market, right? That's why I want the Band-Aid just ripped off, wherever the bottom is going to be. If the bottom is S&P at 3,100, let's just go to it. That's the way I personally feel. You may feel different, okay? But you got to look at remember, the lessons are in the losses, right? So what is the lesson? The lesson is we have more time to get ready. A lot of us have more time to cash up. I've been saying cash up, cash up, cash up forever and a day. I'm going to play another short video about something that's happening today, and that is the 42-year anniversary of Apple. Apple launched 42 years ago. And Josh was telling me today that he bought a stock. I don't know. I think he said around $20, and now it's like $120. And that would have been a 5-bagger. For those of you that's been investing for a long time, you got those stocks that if I would have just held, if I would have just bought. So what will we be searching for? We're going to be searching for these good companies like Apple that if we would have just bought, we literally could have killed the market even with one stock. Take a listen to this.
42 years ago, Apple went public at 22. Today, trading at $142 and change. Remember, stock has split 5 times since December 12th, 1980. Since then, stock's up more than 145,000%. I don't know, John, of all the IPO anniversaries we watch, this is a big one.
It's an important one to remember. About 22 years ago, I started covering Apple as a beat reporter, and the company was on its knees. I mean, people didn't know. Steve Jobs hadn't committed to sticking around. So, you got to measure companies over a longer time horizon, D, for sure.
145,000%. And so I don't care what kind of trader you are. You're not doing that. And so that's why it's so important. And that's why I always suggest that everybody that's trading, everybody that's day trading, swing trading, you need to have a minimum of 75% of your money in just good companies, long-term investments. We are at a point in the stock market that is actually a blessing, regardless of how much pain we're feeling right now. We have had a steady decline all year, and we have the harder recession coming in 2023. I personally believe that the market will bottom out within the first 6 months. I say within the first 4 months is what I'm feeling and what I'm seeing of 2023. It may be in Q3, but you got to make a plan. And so what happens when the market bottoms out? You better have cash. You better have cash to buy. Just listen to that. 145,000% went Apple if you just would have held. Just Google how many recessions, crashes, and corrections we've had in the last 42 years. And you'll have an aha moment, all right? And so that's what I want you guys to really concentrate on while everything is scary and all of that. Sometimes the message is in the losses. So come join us, good people. Come join us by, downloading the top link below. Get the 10 free stock, good people. Open up an account for you and all your family members and your friends. Open up separate accounts for anybody. Get the free stock. Somebody, again, got another $150 worth of Apple. Got an Apple stock. They commented. And so that's a pretty good deal to get $150 stock. And that's 1 out of the 10 stock you're going to get. And remember, we're not doing it for the free stuff. We're doing it, and yeah, it's good to get the free stuff. We're doing it to build wealth. Click the top link below. That's what I wanted to talk to you guys about. We're not going to be scared. We're going to be prepared. And when that elevator comes down to the bottom floor, we do know that there's going to be job loss. We don't rejoice in that. And for those of you employees that know, just like 98% of CEOs know and are getting ready for a recession, if you're an employee and you're waiting to Christmas, the week of Christmas, to lay your employees off, shame on you. I hate when that happened. That happened to me just before Christmas, right? Many years ago. So, man or woman, just do what's right. Start having a conversation with your employees. Try to find other positions to put them in, or other employees or some of your friends. Don't wait until Christmas and then do a rug pull on hardworking Americans. I'll never forget that feeling. I'll never forget feeling betrayed by my employer, who I thought was my friend, who I, gave free overtime to and served them well. And because I was a low man on a totem pole, boom, I get a rug pull. Sorry for going in that, good people. That's just my little rant for today. Remember, today is Moo Moo Monday, and we'll see you tomorrow. We'll see how it goes. Live, love, laugh, and learn.